Okay, I want to share about cryptocurrency like Bitcoins. And often people say it's risky because basically it's in the news, not really in the chart. In the chart, it might suddenly fall down really hard, but that's the only kind of investment that can really reach a high price and higher price. Normally safe investments like Microsoft that has a gentle s- gentle slope, not a steep slope. It normally won't make much profit. It probably make like almost nothing over 10 years or over a period of time. So when it says safe investment for like Microsoft or other uh, mutual funds, it's actually an illusion where it looks like it's safe, but you just don't get much. Meanwhile, on the other side, like very unstable investments, like say even Apple in the early days was quite unstable. Same as Tesla for a company, but for the case of crypto, it has to be unstable, very volatile. If it's not, it doesn't actually have a potential of having a very upwards profitable motion in the trajectory of the price. But of course, the cryptocurrency or the company equity you're going for should have some sort of potential in its value of the company, in its revenue, or in the older days, the profit. So, yep, that's what I want to show that the volatility shows how profitable it is if it can suddenly crash down. It only those kind of investments have the potential to suddenly go up. You, I'll show you an example in Google history. Here is a chart for Microsoft, 5 years chart. It's still a little slopey if you were to draw a straight line on it, but it's not too bad. It's not too bad, but you can see it's like in a gentle slope. It's not really in a very steep slope trajectory. And this is the other example for Bitcoins. You can see the drop is more massive, but you can see each time it's getting higher after a crash. It's like massive highs. It started all the way from, actually it didn't start from 1,800. It started from 2 cents before May 2016. It was at 2 cents when it started out, and now it's its highest it's gone is like 400, okay, 500k, 260k, but that's a huge increase. Like those stable companies are not gonna have this kind of increase, like this highly volatile assets. Okay, I'm gonna share about the difference between the right way to do it and the wrong way. The reason why most people mess up is because they got the contracts instead of really owning the equity assets, stock, crypto, etc. So when they're in they're in contracts based, mostly is called CFT, contract for difference. It's like platforms with beautiful user interface. That's those companies are like blacklisted somewhere in Eastern Europe. And by the way, CFD is banned in Singapore, England, United States. So you better watch out because they're going to market it like crazy on those countries where it has not been restricted. So mostly people will go into CFDs because of the marketing. Their friends told them something, or it's just easy to get into, easy to sign up. You just have to show some uh, your like driving license or water bill. But if you want to have real ownership for stocks, it's a different question. You need to sign up the you need to get your account registered with the Security Exchange Commission in the United States to own American stocks because If you own stocks, you should definitely check out American stocks. It's like globally the most powerful. Um, it would be globally the most um, highest. It would be the highest revenue. Sorry, I would say highest capital in the amount of investors that poured into the stock. Basically, like in other, say in the American stocks, there's like $1 trillion value. In like say in other country, I don't want to say which country. If some one investor, one rich investor pull out, everybody else would die because the total value of the stock market, sorry, for that company would be just like 100 million. Easily one person could pull out everything and it would crash permanently. That won't happen in the United States. Reliable stock, sorry, reliable companies to invest in. And mm, so there's a huge difference between trading and investing because if you, for trading under CFD accounts, you probably just deposit something and um, you'll be forced to exit once the price drops because they'll just have full access to your wallet. That meaning the amount of money you deposited into the account for this, like this Eastern European CFD company. But for a real investment, you can hold a ownership. You can hold it for 10, 20, 100, 200 years, pass it down to your next generation. Basically, the price could fall from like just say from 1 million to $1, and it could go back up to 2 million. But the thing is, they can't touch it because it's your property, is your asset, is your equity. They have no permission to touch it. But under these CFD contracts, they're just gonna see the price fall $1. You leveraged it now. Now they're going to take like $100 or $1,000 from your wallet, and most people are going to get wiped out. It's 100%. Um, it would be an impossible task to do anything that is financially serious with CFD. Yep. Before I forget, so if you want to buy real assets and real crypto, like real stock, you have to go use real platforms like TD, Ameritrade, Interactive Broker, or Saxo Bank. Um, don't simply sign up with some random advertisements you see online because it's not been restricted in a lot of countries, but I don't want to say those names. I probably shouldn't. So you better be careful. I can't say those in this video. Yep. Because if you see CFT, it's not a real asset. It's that's you're making a contract that is one-sided, beneficial towards these Eastern European companies. That's yeah, companies that's stationed in Eastern Europe. So I'm going to share with you why people want to invest in crypto because they don't want the central bank controlling stuff. Like they don't want the economy to be flooded with fake money. What do you call that word again? Oh well, yeah, they don't want the whole economy to be flooded with fake money that has inflation and hyperinflation potential. So they would rather invest in other assets. Like if you notice throughout history, even right now, gold is higher in value than 30 years ago, a lot more valuable. But even though it's more valuable than like a dollar or any kind of currency like pound or Japanese yen, it still is fixed. I mean, it's still the gold price is fixed every morning at the Rothschild, I forgot, Institute of Bank in England. From you could see pictures of them sitting together in the office, and they were like fixing the gold price. So what people want is they don't want to be under the control of the central banker, so they go into crypto like bitcoins. So yeah, so when people say I can't touch it, it's in the air, I can't touch, they don't care. You can easily sell off and buy bitcoins like that. You could own bitcoins as like a millions or like $1 billion in value, and you could just sell it. You could try doing that with a house or any other thing you want to sell. You're not going to get that price. It's going to be impossible. That's why people go into that investment.